Hello traders, welcome to my trading recap video. What you're looking at now are order books for futures products. From left to right we have the Ultra Bond, and we have the 30-year second to left. In the middle we have the 5-year Treasury note. Second to right we have the 10-year Treasury note, and all the way on the right is the E-mini S&P. And in a normal environment, which is kind of what you're looking at now, the ES bids up. So when the ES is pushing the highs, all these fixed income products are pushing the lows, and vice versa. This platform is the Jigsaw Day Trader platform. It's just it's all trading on order flow. There's no charts, no indicators, nothing like that. I started out using charts and RSI and stochastics and all that stuff, and I can tell you right now, this is the only way to consistently make money, is to just trade on order flow and scalp out ticks. That said, we're kind of getting into our first trade here already. It's 5:40 a.m. Pacific time. Today's Wednesday the 24th. It's a Friday. It's the 24th of April, 2020. I'm up really early this morning, 5:40 a.m. my time. I couldn't sleep, so I might as well get up, get out of bed, and start my day, start my routine. So I'm still not quite 100% with it. I was just really eager to go this morning. You can see the profile, very similar to what we've seen the last couple of days. I'm expecting traders to be in full charge today, just staying inside the profile and making easy money. That's kind of what I anticipated this morning coming in looking at this. So I have about 2 sips of coffee in my belly at this point. Still trying to shake the cobwebs, and I just think, getting cocky, so I'll just throw orders out there and see what happens, not even wait for any sort of confirmation from order flow, anything like that. So I'm just going to buy the low. It doesn't matter at this point. Basically, this low was made during the overnight session, obviously, and then we just kind of came down, and you could see we just sort of lingered there, and sellers were not aggressive at all to push it through. The 5-year was still a couple ticks off the lows. The 30-year was a couple ticks off. Same with the Ultra Bond. Didn't really see any danger of this kind of blowing through. What I did see was a missed opportunity, so I ended up making a few mistakes here. And number one was not being fully awake and not kind of watching. I like to watch order flow for at least 30 minutes or so and kind of just get the feel for the context and everything before I engage, and I didn't do that this morning. I literally was standing here for 5 minutes. Again, it's just being cocky, having success over the last couple of days. And then I go ahead and pay up here eventually. I'm trying to stop this thing from running away from me, so I end up getting filled at 31.5, 31.5, you'll see. It's just kind of a frustrating series here. Again, it's still 5:40 in the morning, just after pit open. Pit open for the 10-year, or for these fixed income products, is at 5:20 a.m. my time. So we're still kind of in that initial kind of volatility window. So it drops back in, the bid immediately falls away. So I'm not happy about that at all. Like right here, I'm like, oh shit, I think I'm in trouble. I'm in a little bit of trouble, but not that much trouble, because 5-year is not pushing into the lows. 10-year or the 30-year is still, 3 or 4 ticks off the lows. Same with the Ultra Bond. So I didn't really think I was in a lot of trouble. We've seen buyers at this level already, because they've already pushed it up higher a couple ticks. So we know that there's some back and forth happening. But I definitely paid up, and I'm immediately in the hole, and I'm kicking myself. But I still think it's going to play out. I think it's going to be okay. See, I'm starting to relax a little bit here. Ultra Bond's 4 ticks off the yellow line. 30 years, 10 ticks off. Or excuse me, 3 ticks off. I probably have an opportunity to scratch if I wanted to, or at least try to work a scratch. But then immediately it just gets pushed back down. So the impulse during the overnight, or the impulse for the pit session was to immediately sell this thing down. You always have to pay attention to that because they will kind of show their hand in which way they want to drive the market. So if they want to sell it off immediately, sometimes nothing happens when the pit first opens. It just kind of sits there. So that doesn't tell you much at all. But if the pit opens and they immediately start selling this thing down, you really want to take heed of that and kind of use it as a warning. And if anything, you want to go with that until it subsides. And it takes, a couple hours for them to work those orders through, work them out. So this might be the last time that I get up. Even if I do get up this early, maybe I'll go for a walk or something, or just sit out on the porch and finish my coffee and kind of relax. Because it's the same with the 6:30 equity cash open. You just don't know what's really happening at that point either. You can, you could push through a key level, could push through a profile step. There's just too much volatility, and it can't really be accounted for. So I know I'm in trouble here, obviously. Look at the ultra bonds. It's making new lows. The one thing that I really should have paid attention to here, this was my other mistake, was that I should have really moved my stop loss down a couple ticks, or at least one tick, because the 5-year is not making new lows. The 30-year is not making new lows. The 30-year is still at the yellow line. The 5-year is still above the yellow line. And I know there's buyers here. So I think if I had to do this over, as much as I hate to delete my stop loss or move it, I probably would have been more of an active manager. So look, the 5-year is still above the yellow line. 30-year is not making new lows. So I get stopped. So 5-year still at the low. Still hasn't made new lows. Look at the 5-year, the 30-year, and the ultra bond are back above the yellow line. So I know I have buyers here. And I think we get back up to my strike price, my entry. So I could have had a scratch. So that's kind of frustrating, just to get ticked out like that. Lesson learned. That's kind of the frustrating part about day trading. I think if I would have got filled right at the overnight low, I'd still be in the game here. At least be able to work a scratch with my 3-tick risk parameter. So that was trade number 1. Full 3-tick stop. Really sucks. So we'll go ahead and move on to trade number 2 at this point. Okay, the next trade's at 6:02 a.m. We're back down to the lows. We actually pushed all the way up to 1/2 1. And we got down basically to the previous low. And we just sort of lingered there. And you can, when we first dropped in, it was about 2,000 on the volume profile. And we sat there and we traded until about 6,000. 7,000. And then I saw the Ultra Bond in the 30-year kind of tick up. There's a little bit of volume starting to develop in the 30-year, right there at 11. And so this was a trade I could have taken either in the 30-year or in the 10-year, I felt like. And I felt like it was going to pan out either way. I mean, I was more confident in this trade than the previous trade. So I'm watching this. I think the 30-year is still at 11. Like the selling aggression has stopped. Got the 5-year a couple ticks off the lows. I couldn't get filled initially, which is normally a good sign. If you're trying to get filled at a spot and to match your bid to sell into you, that's normally a good sign. So it takes time here. It takes a little bit of time. So I know we have buyers at this spot. Place and time and everything, I know we have buyers. Because we've already driven this up a couple times. If you look at a chart, we popped it up 3 or 4 times at this level already. So it takes a little while. I'll kind of fast forward a little bit as we get to the fill. So we got 7,400 on the volume profile and 491. It's a pretty decent step. 9 times out of 10, this thing holds. Still think I'm in pretty good shape. ES starts to drop in. It's like whatever we can do, whatever confluence of events that we can kind of piece together to give us clues and to start moving price in our direction. See, we have 10,000 on the volume profile at this point too. So 9 times out of 10, this trade works out perfectly. I guess what I didn't account for was it works out kind of sloppy. I'll kind of zoom forward a little bit until we get to a little bit more action. So we got about 2 ticks in my favor, and I think at this point I was so confident in what was happening that I went downstairs and got some more coffee and kind of let this thing, I figured it would just kind of work its way up the profile. And when I got back, I realized we were back down at my strike price, and it was basically moving against me. And I don't like how aggressive this is all of a sudden. Everything's selling down. The 30-year is making new lows. And what's going through my head right now is that it's 6:20 in the morning. My max risk, like daily loss, is 6 ticks. If I lose 6 ticks, I'm done. So that's kind of in the back of my mind, right? If I were to cover this trade now, I got 5 ticks, and I'm still 1 tick in the game. So I can still try to salvage this day. So that's exactly what was going through my head at this point. I'm a little baffled. I don't really understand what's going on, to be honest. I remember thinking that, like, I don't understand what's happening right now. Like, why is this not working? It always works. But yeah, the offer stacks up pretty heavy. It's just, it's not going in my favor. So I do the right thing. I end up working this out at 2 ticks. And oddly enough, this ends up being the low of the day. So those 34 contracts that hit into 24.5, without a volume stop, I get stopped out there and I'm done for the day. So the 5-year didn't, I think it might have ticked down into the lows. I don't think it did. I don't think it made new lows on that move. So it's just, the Ultra Bond didn't make new lows. The 30-year, I think, made new lows, but so it's just really wacky what's happening. I'm trying to compute, I'll put all this stuff together. I know we have buyers. I know we do. There's buyers here present. They're just getting overwhelmed temporarily. So it's 6:24 a.m. I already have 2 losers, but I'm still in the game. So I'm still watching this thing, and I just see buying aggression come up, and I said, you know what? I'm going to buy this thing again. I know there's buyers at this level. So here's trade number 3. I'm going to buy this thing. And the second trade actually went 2 ticks in my favor, and if I was a more active manager, I probably could have taken a tick out of that. But I was so confident in that sucker going all the way back up the profile that I just let it come back on me. And I wasn't really present. So I just jump right back in because I know there's buyers here. And I'm going to be more of an active manager, and I'll scratch this thing really quickly if they start to come back on me again. But I can see the buyers are starting to step up. Might have been a little bit of wishful thinking here. A little bit of a PTSD from the last trade. So I also know that the overnight low is kind of work as a little bit of resistance as we move up. So I got to keep that in mind. So I'll fast forward a little bit, but I'll save you a little bit of suspense. It kind of comes back on me a little bit. Almost about to stop myself out and take myself out of the game at 6:30 a.m. Cash open happened, and I hate having a position during cash open because, like I said previously, anything could happen. You could have a really nice profile step and cash open, and all the algos start going crazy, and they just blow right through a step. Luckily, this time, the ES kind of sold down enough that I was able to get a couple ticks out of this trade. In typical fashion, I end up covering it a little too early. And right here, I'm in really good shape. I got 4 ticks now. I'm thinking to myself, I'll just take this off. I'll cover it whenever I can. The sellers get really aggressive, and they start pumping up that offer, and I end up only getting 2 ticks out of this. So 2 out of the 4 ticks, which is 50%. I guess that's okay, but I want to get more than that. I need to get more than that. So there's 2 ticks back, and it proves my theory that there are buyers down here. And it's just a little bit of back and forth volatility initially in the morning. So we'll go ahead and fast forward to the next trade. So this next trade's in the 30-year, 6:46 a.m. And I know I just see the ES making new lows, and I'm anticipating there's going to be a reaction from the 30-year. and because they've been reacting to it all morning. So sure enough, they start to bid up a little bit. So I'm just trying to pull a couple ticks out if I can. Can't get filled, which, like I said previously, that's a good sign. I'm only 6 in the queue over there, but it's not running away yet. And the ES continues to sell down. So here I'm getting a little bit nervous because sometimes the bonds and treasuries, they'll kind of wait for this thing to snap back. Once the ES snaps back up, they'll sell this down. So everybody else is buying it in anticipation because the ES is dropping in like this. Everybody's buying this product, and the big dogs are like sitting back and waiting, soaking up all the buying, and then they just sell it as soon as the ES snaps back. Like I'm just sitting here waiting for this thing. It doesn't go, it doesn't go, it doesn't go. Finally, we get some size come in on the bid. So finally, I get an uptick after all that time. And I'm looking at that profile step there at between 13 and 14. I'm surprised I didn't try to work a tick out of that right there at 13. I think I thought that the ES was going to continue to fall in, especially with that size there on that size there at 14 on the offer. Yeah, the ES just kept falling in. I think that's why I held out as long as I did. Eventually, I just scratched the trade because the ES starts to basically start bouncing up again. You can see all that volume that developed over there in the volume profile. So you could tell that's kind of they're going to start to reverse that thing back higher. And I just wasn't prepared for this thing to snap my face. Although I could have had a tick out of it. You can see right there that 13 goes bid briefly. Could have had a tick out of it if I would have held in there. Whatever. I think the most painful part is that all these products end up bidding all the way back up into their profile, which is a little frustrating. So it's, let's see, it's not even 7 o'clock and I've already fired off, what, 4 trades already? So kind of like exceeding my maximum here. So I decided to kind of cool out and take a walk, and I come back and I make another trade. So as you can see, we're all the way back at the top of the range. The 30-year is all the way up here at 24.25. The 10-year is up at 3.5, which is super irritating because if you look down here, I bought, what did I buy? 31, I bought 30, and then 29.5. So I bought all 3 of those. If I would have just held on to them, any one of those trades would have played out. But you never know. That's the problem. It could have just blown all the way down through the lows, and you could just have could have busted your account. So you just don't know what's going to happen. So basically what's happening is this, I think these levels had rejected previously. If I can tell, let's see, what time is it? 8 o'clock. So it's about 8 o'clock. Yeah, so we'd been kind of lingering here at 3. But I think I see just selling aggression step up, and that's what precipitates the entry here. So then I said, well, maybe I'll try to get filled over here in the 30-year. I have a better shot at this point because I can just tell they're going to sell this down a little bit. It just comes from watching the order flow and getting a feel for what's happening. So set my target right where a couple ticks above where they had bought this thing up previously, like 14, 13 overnight low. So that's more of a hopeful target. Obviously, I'm going to actively manage this thing as we come down. The ES kind of starts to base a little bit and gets pushed back up. That's actually the low right there of the day in the ES. It gets bought up from here all the way up. Just it turns into like a trend day. Which definitely helps. That helps to push everything down for sure. So the 30-year is I trade that very differently than I trade the 10-year. The 30-year is more of a momentum product. I don't want it to, because it'll back tick right up in your face. It'll give you 3 or 4 ticks and then take them right back. So at any sign of pushback, I usually just pull it off, just try to cover it. It's definitely a lot of slow moments today, being Friday and all. There was some parts of the day that just you had to kind of kick the computer to see if it was still on because nothing was moving. It's like you're staring at a picture. But that happens on Fridays, especially during lunchtime. In the afternoon was rip roaring. I wasn't around for it, but I could see, looking at a chart, that the bonds went pretty crazy after about 11 o'clock. People got back to the office. Treasuries too, a little bit. So back to what's going on here. I let that thing kind of go back and forth a little bit there at 2120. Really, the Ultra Bond was just still staying at the lows. The Ultra Bond didn't quite. If it was up a couple more ticks, I'd probably be trying to work this thing out right now. ES is falling in, which is not good. But the Ultra Bond's definitely the leader. That's why I don't recommend trading the Ultra Bond. Just use it as a guide, because it'll show you what the 30-year is going to do. So there you go, a little momentum trade, about 4 ticks. Not quite back to where we need to be, but I'll take it. So the next trade is right around 9, just at like 9:08 a.m. And we're basically back up to 24.25 again, and just looking to kind of sell this range back down. This is more just counting on the fact that this had rejected previously. The same thing happened. The 10-year came up. You can see at 3 in the 10-year how there's 15,000 buy orders versus just over 8,000 sell orders at that level. So sellers were absorbing the buying there. And the 10-year, I know the 10-year, if that's not going higher, then the 30-year is not going higher either. So I'm kind of using that to play off the 30-year. It might go through me by a tick or two, but it's not going to go blowing through me. So I'm really just trying to work an order, whichever one I get filled in, either side, I'll take it. This is just a technique that I've kind of learned by observing on slow days, especially on Fridays, and when it gets to kind of midday, these products will just trade in a little 4 or 5 tick range and just go back and forth and back and forth. Obviously, there's the danger of them breaking out. But yeah, you just deal with that if it happens. But in the meantime, you just sell it back and forth. So I get filled here in the 30-year. So I remove that order in the 10-year. Don't need that anymore. I could have worked both orders at the same time, but it didn't look like it was going to get filled in the 10-year. So again, this is just like a range play. I'm if it gets up to 26, then it's a bust. It's not good. So that's just kind of what I'm hoping they can keep it in the range. So I'll fast forward as this thing drops in. And 18 is my target, simply because that is where they bought it up previously. So I just follow it down with my stop loss. I end up getting stopped out for 2 ticks. And I think that right there puts me at, I think I'm positive in tick territory, but that puts me at break even for the day as far as money wise. So I just call it quits. Didn't have it today. Basically stopped myself out a tick below the low of the day. Yeah, it is what it is. So have a good weekend, y'all, and we'll see you Monday.